Today's Sunday, May 29th, and it's 10:17 a.m. Eastern Time. And this is the daily chart for In Mode Limited, ticker symbol INMD. And as of Friday's close, ended the week at $26.64. And I'm looking at this specific stock because Monday is Memorial Day, so the market is off. So I thought I'd just take this opportunity to browse for any setups that I could possibly take heading into this week. And this stock hit my my scanner, and what I identified was the following. So this red hash line right here represents the May 28th expiration Friday for monthly option contracts, right? So this contract already expired. So the next monthly contracts expiring is on June 17th, represented by this red hash line. So I thought that, from what I saw earlier, there could be an opportunity to take a trade heading into the expiration Friday. And with that, I thought I'd just go over what I identified. So obviously, I have identified a support resistance level of $32.15 and a local support resistance level of $20.35. And we can see that there was a strong push up last week, last Thursday, and there was a follow through Friday, right? So we have a strong push towards the downside, and then there appears to be a consolidation area right here where price just pretty much went sideways, right? So price came down, hits support, and has since been going sideways up until last Thursday when price broke out or above the consolidation phase. And what I was anticipating is that there could be that probability that price could run up and retest 32.15 heading into expiration Friday, which is only 2-3 weeks away, right? So what I did was just so that I can show that these two levels are, from my perspective, valid support resistance levels, is that I went back to the weekly time frame, and scrolling left, we can see that price hit an all-time high of $99.27 back in November 2021, then subsequently falling significantly to its current price right here, right? So we could see a touch point here back in March where price held at support, and price also came close to it back in April. Again, this is at the weekly time frame, so each candlestick is a week's worth of trading. So scrolling further left, all the way to 2020, 2019, we can see that as price was running up, when price was below $20, there was about a month and a half of resistance, right? Price being unable to get above it. It pierced it, but wasn't able to close and stay above it. And then eventually price did manage to get above it. And then what was once resistance is now or then acting as support, right? And then we see that repeating over here. So there was a strong push up above 32.15. And then at that point, price was held at support and then just kept on running higher. So from that perspective, that's confirming, again, from my view, that these are two reasonable support resistance levels relevant to the current market or stock price. So going back down to the daily time frame, right? So this, again, initially looked like a bullish pattern. And what made me think that initially was this candlestick right here from May 2nd. Now, I really don't trade candlesticks, but what stood out was that when I click on Market Watch calendar, this company reported its quarterly earnings on May 2nd. And going back to the chart, all right, so if I click on the news from May 2nd, Here it says in mode sees fiscal year 2022, $2, blah, blah, blah. And I believe it beat estimates. Yeah, right here. So in mode Q1 earnings per share, 40 cents beats 37 cents estimate. So that's good news, right? So this is what may be a signal for a reversal, but price just continue fading towards the downside. So it may start running up, right? So, but as price was coming down, it kind of held up right around here, around $26, $27. So it didn't really stay support too long, but I think, right, so there's touch points, 1, 2, 3 days of support failing, and then all these, like another week's worth of trying to get back above it, and then wasn't able to, right? So there was a strong push towards the upside, wasn't able to, but then got pushed right back down. So if this area is another support resistance level, then it's possible that price may get rejected. I think now this could be a fake out, because initially it looked bullish, right? You had earnings, we had support, and then the strong push up. So those were the three things that, you know, would signal a bullish move. So I was looking at this candlestick, and what I did was I went to the education portion for Thinkorswim, and apparently, let me just get rid of this, right? Because now, so I went to education, right, for Thinkorswim. So apparently this is a shooting star pattern, right? So it says here, the description, a shooting star is a bearish trend reversal candlestick consisting of 2 candles, right? So going back to the chart, so we have these 2 candles right here, Friday and last Thursday, right? And going back to education, it says the first candle is bullish and continues the uptrend. I don't know if this is a continuation, but this is a bullish candle, right? So I think condition 1 has been met with this candlestick. So go back. It says the second candle is short and gaps from the first candlestick. So condition 2 is composed of 2 parts. It's short and has a gap up from the prior candlestick. So here we have a short candlestick and also has a gap up because Thursday's candlestick closed at $26. Friday's candlestick opened at $26.38. So there's a 38-cent gap up. So it's fulfilled these 2, well, this condition, but there were 2 parts to it. And then finally it says the second candle has a long upper shadow and does not have the lower one, right? So just like that. And here we have it. So we have this wick or this shadow, but there's no wick below it. So this is now a fake out. From what's described here, right? All of these conditions have been met. Even though there's 3 bullet points, I think there's 4 because here it says a gap, right? I think this is the most important one because what are the chances that, you know, it could fulfill this candlestick, and this, but there's a gap. So I think, anyway, so from all of this, I'm anticipating now that this won't make it up to 32. I think this is going to roll over heading into expiration Friday of June 17th. And here, what else I've identified is now like a wedge, right? So as price approaches the apex, I'm anticipating that price may start falling towards the downside. So that's the issue, right? Because if price continues to go sideways before rolling over, then expiration Friday, I don't think would be an ideal contract to pick up. What I mean is that there might not be enough time to take advantage of this bearish reversal to capitalize on expiration Friday. So what I'm referring to is that if I click on the trade tab, right, and if this assessment is correct and price continues to come down, according to the option chain, there are no weekly contracts. So purchasing a June 17th, so if I open up the option chain, so here are all the strike prices. So I'm on the put side. Puts is a bearish sentiment. And again, price closed at $26.64. So if I was to pick up, in theory, right, let's say this candlestick pattern pans out, then I would consider purchasing a $25 strike, right, because of the 30 delta. So right here, delta 30. Now, typically I would look for a 20 delta, but because there is not that much time remaining for the life of the June 17th expiration, which is technically, which is 20 calendar days, right? But this also includes weekends and this Monday's holiday. So there's actually less time remaining. So that's why instead of looking for a 20 delta, I would consider a 30 delta because of the time decay. I have to factor that in. So again, this is already a high risk trade because of time. There's not that much time remaining, and if price fades slowly, then it's not gonna help the premium of the contract. So what I'll do is, if this does start to fade down, I want to be notified so I can reassess the setup. So here I'll say create an alert. If price crosses below this blue support line, I want to be notified. Puts. So here's my alarm right here. And if my assessment is incorrect and price continues running higher, then I want to be notified of that as well. So I'll place the alarm. So if price so this is a bullish, and I'll use that sound effect. So here's my alarm. So if price breaks above, then this candlestick pattern is bogus. And if it triggers here, then I would consider, but again, it all depends on the when it breaks towards the downside, when this alarm is triggered. If this alarm is triggered on June 16th and there's no way I'm going to take the trade, then I would have to look at the following expiration Friday, which would be in July. And July contracts for a $25 strike, so it's about an $80 difference. So right now, as of Friday, this contract, the $25 strike, it's at $197, but then we have a 20 delta here at 115, but it's at $22.50. So this is the contract I may consider doing. But again, it all hinges on when this alarm is triggered. So if the alarm is triggered this week, then I would look at July contracts. But anyway, what I'll do is, as the trading week progresses or trading days progresses, or when either alarm gets triggered, I'll do another update. So until then, I'll just pause it for now, and I'll be back. Today's Tuesday, May 31st, and it's 8 p.m. Eastern Time. Thought I'd do a quick status check after today's trading session. So today, in mode closed at $26.81. It was up 17 cents for the trading session, and it formed this candlestick here. Neither alarm was triggered, nor has price broken above this support resistance level right here. So far, I guess it's just, it's been a day, so it's nothing exciting. However, I did take a look at this just a little while ago. This candlestick here. So it looks like a plus or a cross. So I browsed around the education tab, and it's called a long-legged doji candlestick, and it's described as either bullish, or actually it's described as bearish and bullish. So I don't know what this means. Long-legged doji is a trend reversal candlestick pattern, which is a doji candle of specific shape. A trend reversal can be predicted if this doji candle continues the trend and both shadows of this candle are long. So both the wicks are pretty long, so that would fit that description, but is it reversing the reversal? Because if this is a shooting star and it's a reversal to this downtrend, so that means it was going up. Now this doji is reversing this bullish pattern to come down. So this candlestick thing is just too much, right? Because now you have contradicting candles. That's why I don't even trade or use candlesticks. This, I should have just paper traded it and waited for the outcome. Also, I should have just waited for these alarms to get triggered. But today it was kind of wacky in the market, so I broke my golden rule, and what I did was I went ahead and I bought two positions. One involves the June 17th upcoming expiration Friday with a $25 put or $25 strike. So with the current price of $26.81, I'm anticipating that price will be at or below $25 on or before June 17th, which is 17 days away. And both contracts, I paid about $113 per contract. And since entering these contracts, the trade is down $25. The second position involves the July 15th strike price. July 15th expiration with a strike price of $22.50. So here I'm anticipating that price will be at or below $22.50 on or before July 15th. I only picked up one contract because, again, I should have been paper trading this. I paid $115, and this contract is down almost $13. So all in all, I've committed $341, not including commission, into these three contracts. And you can see here that these two contracts I picked up a little after 10 a.m. this morning, and then the July contract was almost immediately right after I picked up the June contract. Now, so as the trading session progresses, I will pause it again and wait for this thing to sort out. I mean, if it was up to me, like the way I would have reviewed this, instead of following this shooting star and this candlestick and that candlestick, I would have just settled for the July, right? Because from my perspective, this was a fake out, and price is going to come back down, and it's going to curl or roll over heading into July, and retesting $20. Jumping into the June contracts, I think was a bit premature. And I think the actual break in this diagonal wedge pattern, I think would be sometime after the June 17th expiration. But I don't know. I mean, this is the first time I'm actually trading because of this Shootingstar candlestick. Depending on how it works out at the end, I may or may not use it again and just defer to my original assessment or reviews. So yeah, so we'll see what happens tomorrow or leading into June 17th. So I'll go ahead and pause it again and I'll be back. Today is Tuesday, June 14th. It's 9:36 a.m. This is just a status check on a trade for InMode. We can see that price has fallen significantly since the last update, and price right now is trading at $22.53 as of the time of this recording. So if I click over to the trade tab, the two contracts that I picked up at $113 per contract, it's now valued at a little over $265 per contract. So those trades or contracts are now over $300. And considering there's 3 days remaining, I'm going to go ahead and close out this position because there's not really much happening. And if price just goes sideways or goes up, it's going to speed things up to the point that I'll probably lose a majority of this the profits here. So what I'll do is I'll pull the chart for the option contract that I'm in, and so this is the option contract for InMode, and what I'll do is I'll close out both contracts right at hopefully 260, let's say 265. There, I was able to close it at 265. So at 265, that would net a profit of $302 approximately. So this was a good trade. So if I click over to trade tab and go back to InMode, so the two contracts, I have a zero position. So I did close out of the trade at 265 or $265 per contract, but I still have one contract open, which is expiring in July. So I thought I would just cover, if there's further downside heading into July, then I want to be able to capitalize on the same assessment, with that Shootingstar pattern. So in case there is a more significant pullback. So I picked up this contract back on May 31st at 10:15 in the morning, and my entry price is $115. It's now at $213 per contract, and the trade is now up $96. It would have been higher, but because the price of this stock is increasing, it's negating the profit on the put. So I've lost $22.50 just from this morning. So that's the rationale for this review. So again, this was the candlestick right here from May 27th, and this was the Shootingstar pattern, and I was able to, I guess, use that information to get into a short position. Apparently, I got in the short too early, considering that it didn't break towards the downside until June 9th, right here, and that's when it broke below this wedge pattern right here. But nonetheless, at least this gave me the heads up to take a bearish position. Otherwise, because this was a strong push towards the upside, I would have looked at it and said, oh, that's a bullish move, and I would have taken a long position or a call position, or a bullish position is another word, and I would have been faked out, right? Because here it just went sideways, and then on June 9th it just fell. Unfortunately, I'm out of the trade because of time decay, because right here the contract is expiring this Friday, and any move towards the upside will eat into the profit. So I just want to protect the profit as best as I can. So at this point, it's just essentially trade management. But I do have another contract open that's expiring heading into this expiration Friday for July, right? So if there is consolidation, let's say there's multiple attempts to break below 2035, the local support resistance level, then at least I already have a position in the security to continue making more profit as, or if price continues further towards the downside. So that's the rationale. I guess, do I want to confirm that the shooting star pattern is valid? I can't say for certain, but at least this is something to remember, that the first time I traded a shooting star pattern, it did work out, but however, so here the candlestick's starting to fade. So I'm not sure if this is all attributed to just this shooting star, but I was also looking at XBI, which is the Spider Series Biotech ETF. So this ETF covers the entire bio sector. So here, this was a pullback as well, and there was no shooting star pattern here. So I'm not sure if this was all attributed to the shooting star pattern for in mode, or this had some, or the pullback had something to do with this ETF pulling back as well. So, so that's it. That's the rationale. Again, I can chalk it up as a win for the shooting star, but I would have to do another trade. I'm actually in another shooting star trade, which I'll upload. I'm still in the trade. I don't want to disclose what that is, because if someone sees it, then my concern is that somebody's going to try and piggyback off the assessment and jump into it, and then worst case scenario, the trade goes against us, and so I just want to avoid all that. But anyway, this is so far shooting star pattern 1 for 1. So until the next trade, I will be back, and I see you.